And I guess the best analogy I can give you to explain this really cool, I guess you could say, phenomenon that could save you on a trade is whenever a while back I was training a trader that was in India, and he was trading on the MCX Gold Exchange. Okay, and it's not open to people outside of India. Okay, so he was the one trading on it, and I had Comex Gold up here watching. Then we were doing share screen. I could see his, MCX Gold there, and they should be priced the same. And we were watching the bars and everything. We were using time-based bars at that point. This is quite a while back. And I noticed that he had something that was uniquely different than my charts. And it was the fact that he didn't have all the spikes. So if I was loading up, looking at a gold chart, for instance, I didn't see spikes everywhere. Okay, on his chart that I saw in mine. And let's see, let me open up a chart just to show you what I mean by spikes. And basically what I mean is, pointless price action is what I really mean. In other words, like, nothing really went there, and how many times have you as a trader ever, just got caught in on a trade by like a tick or two, and then it went immediately the other way? It seems like a lot, right? I mean, if you've been trading for any period of time, you feel like that's a pretty common occurrence. Okay? Well, let me pull up. Let's see, we're on what, dollar franc right now? I'll show you what I mean just on dollar franc. Just got a 15-minute chart up here. And so if we said, hey, I wanted to get in at, we put a price of $89.98. And so if I'm looking over here at $89.98, notice it actually got down to $89.97. Okay, here in the last 30 minutes, or here in the last 15 since we've been talking, it's definitely got down that low. It actually got down a few ticks below, or tick below $89.98. So at or below that. So it hit $89.98, it hit $89.97. But we didn't get triggered over on Nadex because we're basing it off the indicative. And the indicative of Nadex, and if you follow along, this is really cool. The indicative of Nadex is based on an average out of the last 25 trades. So you could say it's somewhat delayed, which sounds bad at first, okay? Because we were sort of concerned about this. But it's somewhat delayed. Because it's taking the last 25 trades, it's dropping the top 5 and the bottom 5 and averaging the middle 15. Okay? Well, if that's what it's doing, then here is also what it's doing. And now, why are they doing that? So let's stop for a second real quick. I go, okay, that's what it's doing. Why is that what they're doing? Why did the CME take the last 30 trades, multiply it times the volume, and then, take the average of all volume divided by that total volume weighted average? Why is there these settlement formulas on exchanges? Because they want to do fair settlement. They don't want to have just like a couple ticks be what puts everybody in the money on an option or out of the money on an option when there was only like 1 or 2 trades there. Okay? There would actually be some volume there for that to actually be the determining settlement price. And so they're getting rid of just the spurious spikes in action. Well, if you use that same thing on your elite trading, or, even on this trade that we did just now, if you use that same concept, and in this case, using the Nadex indicative to be your trigger price, so even if you're trading elite, and we're actually working on maybe making an indicator like this, where you're taking that last 25 in the middle, and all that stuff, if you use that, then what ends up happening is you get rid of, you get rid of getting knocked in by a tick or two. Now, you will give up some of your profit in this process. Maybe give up, if you're doing a binary $5, or maybe give up a couple ticks if you're doing futures or Forex, or, maybe give up a few dollars if you're doing a spread. But you eliminate like a 26 tick stop loss because you don't end up getting in the trade. And I was even talking to Brian about this. We're talking about, sometimes maybe you'll get like, a couple apex, like 2 or 3 apexes in a row, that, if you would have took it exactly to the 3-tick rule, could have lost. But by using the stop plug-in, he didn't get filled on, maybe 2 of them. And then on the third one that he did get filled on, where he had to stop 5 ticks below, and it went 6 ticks below, and then it flew back up, well, he was using the indicative on the stop loss also. So it went down, but the indicative had not averaged the price down low enough yet to trigger it. And it's almost like a delayed price, but it's better than delayed price. It's saying that there must actually be trades at this price level. So I do want to sell 1 tick, at this one price. I do want to sell right at, 89.98. But only if there is actually a decent amount of volume at 89.98. So if we would have sold that thing at 20, we'd be down like $50 right now. But since I used the Nadex indicative, we didn't get triggered on the trade yet. Okay? So I don't know if that's making sense. I see a couple comments over here in the webinar room that is making sense. But let's see. Let me show you an example of how they calculate it. Okay? And all right, here's one. So let me close that out. I'll bring up an Excel sheet. I'll show you exactly how they calculate this. Okay? So go over here, and here are the last 25 trades before the 4 o'clock expiration on Monday that actually took place on the S&P E-minis. Okay? So that's the last 25, and we're going to go in, and now what I do, okay, the easiest way to do this, so if we say, there's the time, and let's get rid of this. We'll make our own columns. And that's that in. Okay, so we got time, we got price. And now what I'm going to do is I'm going to take these 2 columns, I'm going to sort them by the second column, by price. Okay. Now you go, okay, what are the top 5? So we got 1, 2, 3, 4, 5. All right, we'll just let me move that ticket over here while I'm watching it. So we'll go over here. We're saying we're not including those. And then we're going to go over here and click right there. Okay? Now there's 15 right here in between. Okay? So there's actually a counter, if you ever want to know, like right there, there's a counter. Okay, so watch if I go through and I highlight these. 15 rows. So it says 15R right up there, right up here. I'll say 15R, so this is the middle 15. Okay? And then we're going to take the average of that middle 15. All the way up here. And then they round it out to 1 decimal place past where the underlying is quoting. And so that it actually would, like 1842.75, so they take it out 1 more decimal. So we get 1842.8 is our settlement price on it. Now notice it traded at 1842.75, it traded at 1843, but the settlement is 1842.8. Okay, that's that settlement price, and the indicative is not 100% the exact same as the settlement price. Meaning, this is a live chart. There could be like millisecond delays, etc. inside of it. Yeah, glad we didn't take that trade, right? So even though we had everything set up, we didn't get in that trade simply because we used the indicative as our price, and so that little momentary spike where other dollar franc traders were posting, maybe short orders to go short right under a bar or something, they got triggered. So yeah, that's another feature. It actually canceled out in the last 2 minutes, so you don't get filled during that 2-minute dark zone by having just a stupid order out there. So it's another really nice benefit. But so it'll automatically cancel the order for us on the new stop limit order. But the biggest benefit just being simply that it is making it where we're able to use that average price to ensure that it's accurate pricing before we hop in. And by accurate, I mean there's actually a number of trades at that price. Not simply volume, not like some guy dumped 1,000 contracts, okay? So 1,000 contracts would actually count as one trade. So it's not how much volume was at that price, it's how many trades were at that price. So think of this as a trade-based volume filter. Like trade volume, not contract volume filter. So how many trades at that price were there, and that will basically force the average price to more reflect what really happened, and therefore you don't get triggered simply on 3 ticks above or 3 ticks below. So it's actually pretty cool. It's one of those accidental things that we weren't really looking for, and then started noticing, I'm like, wow, why did I get in that trade? Because I'd look over at it, and I think I should have gotten that trade. And so I'm thinking there's some error, and I'm like, oh, that's because the indicative actually didn't hit that price. So that's why it didn't trigger. And more often than not, if you think about it, obviously more often than not, I'd be glad that it didn't, because if it was, if it was moving in my direction, it was obviously a winning trade at that point, and I didn't really care. But it's the ones that, market just by a tick or two and go the other way. I think that's one of the most frustrating things as a trader. And so by using that Nadex indicative, it actually is a pretty sweet way. Now, notice I'm not using the Nadex indicative chart. I'm using NinjaTrader or Thinkorswim or, whatever your preferred platform is. Okay? I'm not using those. So I'm using those charts in order to do my trade over here. And, so we could go over and we could go, okay, well, now let's check out what we have coming up. And let's see. That's close. There's not a lot of implied volatility built in right now. So yeah, I mean, if you want to do out of the money, in the money, whatever. By now it would have triggered. So now the indicative is actually like up and higher than where the price is. So if you would have had that on there, now you definitely would see it. Then look at some of these as well. But I hope that makes sense to you. Just basically using that Nadex indicative, that's probably one of the biggest discoveries I've made in the past week of how that could actually be an added filter of when I'm targeting a price level of choosing to get in or get out of a trade. And then let's see over here. What else we got? I mean, there's tons of trades. I can trade all day. I'll do 20 of them in a day. But it's a matter of trying to cover different topics and do it at the same time. Let's see. Okay, so yeah, let's find some other stuff we might be able to take advantage of. $1 potential. I think everything's starting to pull back though. Watching to see the correlations. So I'm literally looking like every FX pair at the same time. You think about, they're all interlinked, right? Because they're all, I mean, if you do A over B times B over C equals A over C, right? So because the B's cancel out, so every FX pair is actually interlinked. You think euro dollar times dollar franc is euro franc. And so you can infinitely do that loop, and there's like this big web of all FX pairs actually coming together and being one giant same pricing model. So you should see a correlated analysis where you can see, hey, things are flying up, things are flying down. And right now I'm just looking for a good momentum confirmation on anything. But let's see here. The one thing that looks like it might keep going are the indices. It's like they're pushing it and trying. So let's go in, let's check out our indices. We'll go back to where we started. Go in here, go down to the Dow, 16 for, say 16. Okay. So that'll be one trade I'm going to look at. I'm going to pull up a few of them, and you'll see it when I submit them. And then I've not submitted them yet. I'm just opening the tickets to get them ready. Okay. Now I'm going to open over the S&P. Not seeing anything there. There we go. Alright, I'll check out the 18, 31, and 33. Potentially. Let's see what else we got. The Nasdaq over here at 35.54. So popping up 35.55, 35.56. Yeah, so 35.59 would basically be the contract we'd be checking out on that. By the way, if I find my contracts too, another way I can mark them is like right here. So that way the contract will show up. I think somebody's placing every contract I call out right now. And let's see. Alright, so I'll grab the Dow one. That one's going. You gotta check and make sure it's getting filled. Yep, we got filled on it. Okay. And watching the NASDAQ. Somebody's taking the bucket on it. Check and see, but yeah. Alright, there we go. Okay, so NASDAQ. So that's a potential trade right there. you get a weird error like that, I would definitely want to look at the website to see if it's popped on up. Alright, and then yeah, we can go back in and just 5 to 95. Bring it down to an hour. Then only choose the instruments that we're interested in. Gotta make sure that's the right price. It is. Okay. So we'll sell that one off. Just let them do their thing for a moment. Scrolling through, see what else we got. Here. Try to find some other non-correlated instead of throwing on like all 4 indices, seeing what else we have on like Forex that might be a good lineup. See here, come on. Scanning through, looking for different trades. And there's nothing we can do about those trades right now. I mean, you can put in a stop loss on them, I guess, if you wanted to, but right now I'm just sort of letting them do their thing. Alright, looks like we might have a trade over here on yen. Maybe. I'm going to look a little bit closer. Yeah, one for an opposing breakout. Come on. Yeah, the 8 a.m. one, man, that was like, we should have started the webinar at 7:30 instead of 8:30. Potential one here on the Aussie. They've had a pretty big run on it, though. Of course, big runs can continue. What we got? 89. Doesn't seem right. More. Oh, it just ran up so far in the current hour. Took out all the strikes. What do we got? previous. Let's see here. 88. Yeah, still it ran so far to pull back. So basically, Aussie dollar is out of strikes, right? Because it ran right through what we were looking for. So we'll move on to the next pair. Nothing happening there. Pound, nope. Euro's bouncing right now. See, I'm also looking at tick volume over on market noise. I got USDN again. Yeah, blew through every strike on that. Man, I can't believe it's knocked out every one of them. Okay, so next hour, what do we got? Yeah, those bars were pretty big. 25, 30 pips on a bar. It makes it a little difficult. But I would say there's definitely two layers of trading. One thing that I've definitely learned working with a lot of traders on different strategies, different systems, is it's not only having the right strategy to pick the right direction. Like, this is a big thing on Time Scalper that I've been working on with John, is that he's really been seeing as he's been paying attention to the details. It's not just, hey, I got to buy a signal, I got to sell signal. It's, is there the right contract for me at the right price within the expiration time that I'm willing to accept? If yes, great, I take it. If no, I don't. And really be willing to not take that trade is a massive, massive step in becoming a professional trader. Because if you just try to go, oh, I'm just going to grab this contract because I want one because I got to buy, then you're going to regret it a lot more often than not. So now the one good thing is things are slowing down, so that'll actually make the next expiration a lot easier for finding good trade setups. So we're coming into a consolidation, potential reversal zone here. So we're going to get a breakout after this. We have a little time probably before that happens. We burned through a lot of our intraday strikes already. For this current hour. Yeah, it's hard being patient, but you just gotta let it do its thing. So if you have an exit plan, put that exit plan in place. If you don't, then the best thing you can do is go look for other trading opportunities, because sitting there sweating for 45 minutes is not going to make you a better trader. see. That seems off. Looking at something. Let's see. Okay, 143.27. Be a sell. Over on the euro yen, okay, and that Aussie one, man, I love that Aussie layup, but we just didn't have a binary for it. And let's see here. Let's see what we got on these. Now, do I have any questions so far? Just to pause and, just trying to get you some, like introduce you to the concept of waiting on indicative for triggering price and things like that. Do I have any questions on that concept? If I don't, I assume that means either you understand it or you're totally lost. So totally lost is okay, but I just want to make sure, because then I can go back and review it for you, that you do. You sort of get where we're coming from on that. That's correct. Yeah, I went short 143.27. So got in and short at 24.50 was my fill price. Let's see here. Dollar franc might be setting up for a short. Technically it had one, but it didn't really get triggered on the trade price I wanted. So let's see. Dollar CAD sort of doing nothing for us right now. Dollar yen looking great, except for I think we're out of strikes. Yeah, we have no strikes. So that doesn't do us a lot of good. Even the ones I choose for the next hour out are not ones that, they're still too far. Let's see here. Aussie dollar. Again, awesome, but no strikes just because we had such a massive move. Just nothing there. Unless you're going to bank on some sort of retracement. Which would still the closest would be, you'd have to bank on it going all the way back to 8903, and I really would not do that. I would expect a momentum continuation. At least through the next hour. And looking at euro dollar, I would probably expect it to move down by the hour, but need to see some follow through. Looking at the S&P, yeah, we can pull that up. See, we have current hour. Based on market movement, yeah, 1833.4 would actually be the selected strike that I'd want to choose, like right there. Go short. Okay. See if I grab that one, boom, hit on. You can see all the prices of contracts that are there. Grab it again. You know how many you want. Okay. And then check and see, did it get filled? Okay, I got filled on one of my S&Ps, but I didn't get filled on the other one of my S&Ps. So I can click it, open it, because I have a price order pending at, what, 26.50. So if I wanted to adjust my price, I could, or leave it there, and just a simple limit move in the market could fill it for me, which it did, which brought up my average entry price. So a lot of times I do like to tier in like one at a time. Or if I'm doing, 100 contracts, I'll do 10 at a time. But basically tier in, so that way there's a little adjustment, I can get in, a few more. Let's see here. Got our Dow contract. That we already got that one taken care of, right? We have the Dow in, we have the S&P in, we have the Nasdaq in. Let's see. I mean, we're only a point off on that, so I'm not really concerned about it. Let's go over. There we go. Yeah, Russell seems to be the bucking the trend contract right now. So I'm just going to stay out of the way on that one. Now, one thing that's important to do is to take profits. So maybe we'll go ahead and set a few of those at the moment. Just going to say, hey, you know what? This contract gets down to, $5, $6, whatever. Just get me out. $6.50. I'll take that. There we go. So we take profit on that one. That's like an $18, profit. We go over here, set a take profit on that. And we'll set it, say, at $6. I mean, you could do $4, $5, $6, whatever. So I'll set it at, say, $6 to buy it, which is I'm telling somebody else to sell it by doing that. Okay, so to sell it to me so I can buy it from them. So I put that on there, I let it work, because maybe when I'm looking at other things, maybe it drops all the way down to 6 and I don't even notice, and then I miss out, and maybe a trade flies down, would have taken profit, but it didn't because I wasn't paying attention. So by putting that in there, then at least it's working for me versus against me. Go over here, throw that one in, let that one work for me. So now all my take profit orders are working. And this is one of the nice things too about the scanner versus the platform. If I go over to the platform and I'm looking at this, let me show you. Then I got open positions, I got my working orders, but like trying to link all this stuff up and to make sure you got the right ones on the right contracts, the right number and everything else can be pretty daunting, especially if you start doing 3, 4, 5, 10, 15, 20 different trades at one time. Which, may not be there today, but you're going to get there. And so what this does, it links up all your working orders with the position itself. So it's the same contract, say you're short 2 contracts here, but you have an order working on that contract to buy 2 of them back at 6. Let's see here. Pound dollar. Pound dollar. All right, let's check out pound dollar. See what we got going on. This is sort of a mini live trading session. Just show you some trades. $16. What are we at? 24 right now. Really? All right. Yeah, I'll take that. Okay, so looking at price action, momentum-based price action. 35. I want to say my first one. Sort of watching the action a little bit. Maybe if it comes up a little bit or goes down. Get my ticket ready for maybe my second contract. Alright, so we'll grab that second one at 37.50. Okay? There we go. So now we have those contracts all in. Going. Well, I put those in, so again, I want to make sure I get my take profit on. So let's go in and just, again, you can do 4, 5, 6, whatever your preference is. I'm just happy that I made money and I'm happy to get out. If I get a high enough fill price like 36.25, I might be happy with getting out at 10 or 15. I mean, I don't care. Okay? I don't necessarily have to get the thing all the way down to 6 and max it out. But I'll put that on for now just to, watch it, let it do its thing. And let's see here. Yeah, all these have a half hour. All I'm doing right now are the 11 a.m. contracts. Yeah, this is a... Remember, Danny, I told you there's a nighttime one that's going to be coming out, but I've been actually applying it the daytime too. This is it. So, and it's been winning, like, ridiculously often. Like, insanely often. And we're basically just going to call it, like, to make it easier, call it predictor. But it's analyzing all price action, true price action, putting all those pieces together. And then just, basically calling out the strikes. But you can do it 22, 21 hours a day. You can also do it daily and weekly. So it'll actually become a daily and weekly service as well. But yeah, like I said, remember last, what was it, Tuesday or whatever, I was like, hey, pretty soon we're going to have more signals than y'all can handle. So it was funny, the other night, I couldn't even go to bed till like 4 a.m. And my wife was laughing at me, And I'm like, it's hard to go to sleep when you just keep taking profits. And yeah, so here's the goal that we actually want to do. This is only for, we'll figure out how we're going to structure all this. I don't know all of the structure yet. But the goal, what we want to do on it, because it's so fast, you don't really want to be looking at charts. It's a pain right now because I've missed out on trades just because I'm looking at charts. Is actually have like a side column for those that have access to, we'll just call it the predictor, okay, for now. And it actually would have like red and green arrows next to acceptable strikes based on the parameters. Because, think about it. That's the whole point of this thing is it's a filter. So it'd have like a red or green arrow next to it. When you clicked on it, what would it do is, let's say, we want to get in on this strike if it triggers below, 438 or whatever, okay? So when you click on that red arrow, it would open up and actually fill that information in for you. And maybe even put like a worse limit, like, don't sell for less than, 15 or something like that. And all you have to do is click that and open it up, and this is what would show up, and you hit activate. And then again, you can choose whatever time frame works best for you. So that's sort of the direction we're going on it. And because it's how many trades do you want to trade? How many can you keep up with at one time? And so you could go, you know what? I'll just focus on one at a time. Okay, now I'm ready for 2. Now I'm ready for 3. Let's see. Pound yen. Yeah, they're all doing pretty well. So, keep going. That Dow could stand to pull back a little bit. But, you know, it's got a little time. Got 25 minutes. Let's see here. Pound yen. Do we have anything on the pound? Yeah, nothing. Okay. So I just gotta let it go. What about the Aussie yen? So the idea is sort of using the best of both worlds of like a lot of the stuff we use inside Apex, and you know, basing everything on price action, and using it based on the scanner. So combining the two things, and the idea, yeah, quick chart of pound dollar. Where did that chart go? Okay, here's the dollar Franklin I had up for you. There's pound dollar right now. Yeah, they'll drive you nuts because they'll be like in the money, out of the money, in the money, out of the money. You know, positive, negative, positive, negative. You know, you'll be up $10, you'll be down $5. You'll be up $20, you'll be down $20. You'll be up $30, you'll be down $30. You know, depends on how many. Now I'm also doing twos, so everything is doubled. But yeah, Aussie yen unfortunately not being very cooperative. Let's see. Euro yen. I wanted to cycle through. Let's see here. Euro yen. We got $143. I mean, I'd take that trade, but I wanted it at a better price. 143.17. If I was going to do that, I'd be setting like a limit up. That was higher. Like say at 30 or something like that. That's what it would work. See, like sell limit at 30. Probably works, just not worth $11 to me. We'd have to add on. Maybe throw in some commodities while we're going. Look at the list here. So what else we got? Okay, we'll throw on oil, see if we got anything there. Let's check this out. Oil, they're in a contract that would qualify. Now we got that's sort of the hard part right now this morning is we had such a big move right out of the gate. At night, it's easy. You usually don't get that big of moves. We had such a massive move that basically we want to be selling like 97s and stuff. There's like really nothing. So you even start getting up to like 230 at the end of the day. So that's not really my trade. So I have to pass on that one for the moment. But again, we get new, contracts every hour during the day, which is nice. Let's see. Gold now is just right there. Let's check out gold. watching this one. Hold on, just analyzing it over here. See on this one. Current hour. Interesting, the minimum is down. So I'm going to throw on that, literally like at the money one right there. Grab that one. Let's see here. Let it do its thing. So that was the contract. Was that? That was the 1224.4. So now the main ones I've been focusing on, okay, for this strategy so far. We're going to go through and we're going to test really heavy, like all the Nadex markets. Is actually we've been testing mainly like dollar yen and euro dollar. For the purpose of you have contracts at any time, day or night. So basically want to make it where it's as tradable for as many people as possible, despite whatever their schedule may be. Let's see here. Oil was out, gold was out. We got gold. We can check silver, right? And then we got copper. We got soybeans. And corn. So we're covering the full spectrum here. With any trade points on these. 1 minute. Let's get everything set up. It was sort of fun. I mean, I sit back and just, watching a bunch of them at one time. And there we go. Okay. So, yeah, that is going to be like the downfall. That's a good point. So what to work on, maybe the modification may have to go to more of a, it's got 215s. Okay, let me make an adjustment. On those. So I can apply the same strategy. Dailies and weeklies as well. We didn't start right in the morning, so that's really the bummer. But let's see. On soybeans, we would have got in. We could have at like 12.90. So that's convenient, right? But that's the strike that would have been the chosen strike. On corn, the chosen strike would have been around 4.22 or so. So weekly you got it 4.22. Daily's already burnt. You could have got 4.23, but it's still at $23. So 4.23 would actually be an acceptable strike on the dailies on those. And let's see here. What else we can do? I'm trying to pull up different ones. Let's see. We have gold, silver, copper. Copper. We didn't look at copper yet. Let's see here. Copper. We got. Nothing yet. We did our indicative. We have to be going for 30. That's pretty impressive. I would have changed a lot in price by like a tick. Rate's about to say we go with 3.393, but over there. But it yeah, that would actually be the preferred strike right there. But the price really is not there for what we're looking for. Let's see here. Yeah, it gets really wiry on these things going into expiration. So going in like in the last like 10 to 15 minutes, that's when you really start seeing like massive price fluctuations taking place. One of the things I taught last week, which is pretty cool, I don't know if you caught the show, but one of the questions I always get are, how is the price of a binary determined? Okay? So, if you go over and we pull up, say, the S&P, Okay. And then we'll pull out the ones that expire in a week. Or, oh, this week. There we go. We got the ones that expire this week. Okay. And then I'll go up and I'll pull up the delta and gamma. This is a pretty cool concept. Once you get it, it's like, oh, binary pricing starts to actually make some sense. Then, what you're going to want to do, if I get my chart to move around for me. There we go. Let's go over, for an example here, to the S&P. And let's scroll down just to the weeklies. Okay, on the S&P here. Got US 500. We're looking at weeklies. The reason I'm saying to look at weeklies is because they're expiring at the same time as the weeklies on the S&P E-minis. And if we can find some strikes that are somewhat close, okay, so like 18, let's see if we can find some that are actually active and close. 1840, do we have an 1835? So we'll go for 1835. Okay, here we go. This is a perfect example of what I'm trying to teach. Check this out. The price of a binary is basically reflective of the delta of a call. So on a call, if you don't know what delta is, to sort of bring it back, okay? If you don't know what a call is, to bring it back to basics for you. On a call, when you buy a call, there are several what's called Greeks that help you define how much that option will move based upon the underlying price movement. Okay? So understanding that concept, we then go, okay, so if that's how that works, what does a delta mean? Well, delta is a Greek that simply means how much does an option move based on the underlying market's 1 point move. So if the S&P moved up a point, how far would the option move in value? If the S&P moved down a point, how much would the option lose in value? Okay, so would it become cheaper or more expensive, and by how much? So if the S&P moved up by $1 right now, then this option right here, okay, this 1835 call that expires Friday, would change in value by 41 cents. Okay? Because the delta column, okay, the delta itself, we can customize this, I think. Okay, let's get rid of, there we go. The delta column is 40, which means it'll have a 40 cents change in value. Okay? Well, check this out. On that 1835, look at what a price of our binary is. Now, understand this is 1845 or 1835.5, so we're 50 cents off, but it's only 2 ticks. So right there, we're actually seeing that the delta is reflective of the price of a binary. So in essence, what's happening is when you trade binaries, you're trading, will delta go up or will delta go down? Okay? And, we can go higher. We can go up here to, 1823? We got a 67.5. This is 1825. So, pretty close. And look at the delta, 67. The price, 67. All right? So that's actually a pretty cool factor, is if you understand that, one, it's binary pricing models aren't just like something where somebody's randomly picking a price out of the air. Okay, that's obviously very helpful. But also, you get to understand the fact that that's where the pricing is. That's what you're trading. You're trading that delta rising or falling. And people go, okay, well, I still don't quite understand that. Well, think about this. And this is sort of a call delta option lesson. On a option, on delta. Delta has to be at 0 or 100 by expiration. Does that sound familiar? Okay, it has to be at 0 or 100 by expiration. Sounds like something else, right? A binary has to be at 0 or 100 by expiration. A delta on a call, if the underlying market is at the strike of that call, the delta will be 50. Okay? Does that sound familiar? Yeah, because a binary, if the underlying market is at that strike, the price of the binary will be 50. Okay? And it's not so much like that you have to understand this or get this, but if you come from a option trading background, or if you're trying to figure out what is the pricing model, where is it coming from, then you could use basically any Black-Scholes model as long as it can calculate, the intraday, like expiring within 15 minutes, an hour, 2 hours, whatever, and you could actually come up with what the approximate price of the option should be. And if the delta matches the binary price, then what also matches is the gamma. So I can know in a 1 point move what should be my expected price change in that option. So if the gamma is like 0.02 and it moves up a point, I should expect it to move up, 0.02. If the delta is 56 and the gamma is 0.03, that means I should expect in a 1 point move from 1830 to 1831 that the delta will now be 0.59. So I expect a $3 increase in my binary contract. Okay? So that's a pretty cool model. I know if you don't trade options, then that's just like, what is going on? But if you do know options, if you do understand delta and gamma, it really helps to understand that that's essentially what the Nadex price is. It's a reflection of delta. And delta is also a reflection of a probability of expiring in the money. Also, again, something that sounds very familiar because that's sort of what a binary price is. It's somewhat reflective of, expiring in the money itself. Let's see here. Can you hide your P&L on the scanner? Not yet. We're going to add that in because that's one of the things that I like to do when I'm trading is actually hide that and just let it work itself out. If I have a stop loss plan, I'll open the stop loss ticket. I'll let it take care of itself. But yeah. Yeah, that gold contract we sold, it's doing really well. We just took profit on one of the indices, I think. Yeah. And Euro Yen one, that one's pretty close right now. Sort of going up and down, up and down. The tech and the Wall Street are having trouble. The Nasdaq one we did earlier already took profit. Let's see here. We got one of our golds filled already. Let's see, we're going to grab the other gold contract right now. $6. Taking it. Done. Locking in the $45 on that one. Got a few more working out here. Let's see where they end up. We got a few minutes. And we do got a little bit of a distance on a few of them. So it looks like a few of them are going to get sort of whacked. Let's see here. Just going through and checking. We got a few left. US Tech. Yeah, we got a couple points on that. We got our Dow. We had on that 34.16. And we're on the Dow right now at 34.22. That could depend on what happens. Who knows on that one? We do got to move 4 points in the next couple minutes. Euro yen. We need about 5 ticks on. So yeah, we got 5 of them that are not, perfect. I'm just sort of flying through some trades for you here. We'll see how these turn out. But overall, out of all the positions that we initiated, we've done pretty well. I'm trying to go through and pull these up and see. Alright, so the first Euro yen we did, the 143.27s actually took profit already. Let's see here. I think I show on a page. Edit this. Alright, so looking at the second, trying to just pull up all the trades that happened. I found the ones where we actually closed out. So we got the S&P 500, we closed for a take profit. Let me check on these. Let's see. Alright, yeah, Dow's going to lose. That NASDAQ is going to lose. That Euro Yen going to lose on that one. Okay, so we got that done, but we got the S&P 500 took profit. We had the 143.27 Euro Yens actually took profit. Just the 143.17s didn't. We had quite a few of the S&Ps. I layered up on those, and we got the pound dollars took profit. That took profit pretty quick. We got the gold ones. They took profit. They were a large profit. We sold those for $51. So we got a nice return on those. And yeah, so not great, not horrible. But if you just did every single one of the contracts, you'd be close to break even, or maybe up or down, $50 or $100, depending on how many contracts you were doing. So, and exactly what prices you got filled at. I mean, that wasn't complicated. We were just going through and sort of throwing on the trades, and I wouldn't be as normally picky as I would be, because of course I'm only doing 1 or 2, and depending on your account size, that could be huge or small to you, right? So, most people are going to do every single trade, but I like trading multiple contracts because it provides a level of diversity in the trading. So yeah, we're on a new hour, so we could literally just like rotate around and do the exact same process real quick. And go in and see what other trades we can catch for the 12 o'clock, because now that we're at the top of the hour. And I'm going to look and see if there's anything close first, so we can focus on that. We're getting some major swings. I'm just trying to find the best ones. Let's see here. Looking across everything. And the indices just basically did like an uptick in that bar, but they're not done. cancel. I'd usually be able to like throw on trades really quick and easy. It's just we had those big bars right there on the open, so it's sort of one of the harder times to hop in and do it. It's not hard to do the strategy unless you're flying, but it's hard to go back and find a whole bunch of them, or I can find them like crazy. But in the afternoon, maybe I'll have to do an evening session, doing the same thing. Yeah, Samuel. Yeah, Samuel brings up a great point about. One of the cool things about understanding that a binary's price is reflective of probability. It's also reflective of delta. That brings on another factor. It also shows you leverage. So the massive leverage that you're getting with them. Okay, let's see. Come on. Watching. Got so many things in this wait and see mode going on right now. Let's see. Okay, so I'm just going to start going down. Like, let's pick them off one at a time. Dollar yen at the moment. If I do that one. Okay, then I'd be looking to, and I'm not buying it yet, okay? These are stop. But and then I can say I don't want to buy it for less than $80 if it is that price. So it won't even trigger my order until this indicative hits that price. Alright, so dollar yen, that one's working. If I find a better one along the way, it doesn't matter, we'll cancel it out. By the way, I found out that hopefully next weekend we're supposed to, not this weekend, but the following weekend, Nadex is supposedly going to be putting the upgrade in to allow for 50 out-of-ticket windows at once versus just 5. So that way you can have a lot of these pending ticket orders out there. Let's see here. Go to gold. And I do the same thing on this one. A little higher. Say I won't buy it for more than 80. Okay. So got that one going, just in case it breaks out, so I don't miss it while we're talking. Let's see, corn and soybeans. We said we're sort of going past those today. Euro dollar. There we go. See what we got. See if we got a good strike. They started an hour ago, so that's the only issues when they're big moves. Here we can shrink gold out of the way. I don't even know that function exists. Like you can leave that one open and just shrink it and open it. Also, we can back this down to again like an hour and 5.95, like that. This one, what we got? Something's not adding up in my math there. That took off. But the bite at 70 is at 90.50. Okay, well. Let's see here. The highest I'm willing to go on that. I actually would go to 36.58, so that's fine. There we go. I think that's actually the one I was shooting for anyway. Okay, buy a couple of those. And grab it. Alright, that one's already set. Now we go, the other ones are working. So to take profit. Again, you're always going to be down the bid-ask spread the second you get in. Okay, so don't freak out just because you're down when you get in. That's just normal trading on anything. And we'll sell these for 94. Okay, so that way we have a take profit working. If they can move fast. Alright, so there's a euro-dollar trade we got going on for 12 o'clock. Pound dollar, not yet. Russell, not yet. Aussie, not yet. Silver, not yet. Now it's really quiet. Alright, NASDAQ looks like it might want to pull up. Okay, so let's be ready for it. 35. We're almost at 35. What's 65? We're 35.63. Okay. Their NASDAQ on. And alright, I'll buy this contract if I'll move this thing out of my way, it's causing a problem. Okay. If let's say we break based on the predictor strategy, if it breaks 35.66, and I don't want to buy for higher than like 80 bucks. I may get better, but I don't want to get worse than that. If you can't give me that, then submit it at that, and let it oscillate to fill me. Okay? And then just hit, do one, we can do two, whatever. Contracts. So, throw one for now. Let it be working. Then when it gets filled, we can go on and add another one if we're ready. Looks like it might get filled. It's working. When we've hit the price on the screen, okay. Let me see. We got a high of what? 35.65 on this bar. We have 35.65. We're actually up to 35.65.25. Let's see. We've actually hit intraday right now. We've hit our price. Okay. And this is what I was talking about at the beginning of the webinar. One of those really, really frustrating things of trying to go in and put in an order and then getting like nicked by a tick. And by using this method that I'm teaching you, okay, which is to use the Nadex indicative price, okay, then we don't just get nicked, directly by one single little tick. go. Pin that for a moment. Now let's. I don't know where the ticket. The heck that ticket went. Is it pinned under here? So I want to show you this. Let's see. Let's go over here. Futures. All right. I mean, this really is one of the coolest things I've ever seen. That's why I'm so excited about it. But we're looking for, like, you know, hitting 35.66, and okay, so we just got 35.66. So it's a 35.60. What, 5.3? So if it gets to 35, like 66.25, then like we won't get filled. Okay, like immediately. It'll actually have to break the trigger to get us in on the trade. And that's sort of what I was saying. I was like, I wanted to break that price to get me in. And I've mentioned this a lot of times on Elite, where I've said, like, yeah, we have the 3 tick rule, but I'm sort of looking for it to break that 3 ticks. You know, not necessarily to get in on that 3 ticks. And this indicative is a really cool way to make it break it, to make it where there has to be a number of trades, not just volume, but actually trade, like, not just one guy jacking the price. Because one person could move the price by a tick or two for at least a second, you know. Whereas it takes a lot of traders to really move that price solid. And that's where the average settlement price comes in. Let's see here. Okay, so we got that one. It's just pending and doing its thing. Let's see what else we can come up with. And basically just, you know, scour the market. This is also one of the reasons why I want to build it into the scanner. It's because I want to be able to make it where it's really easy, where you're not having to sit here and go from like chart to chart to chart to chart. And it's just right there in front of you. Okay, so all right, we got the NASDAQ one working for us. Nothing on the Dow, nothing on the S&P, nothing on silver, nothing on Aussie, nothing on the Russell yet. Pound, getting closer. Alright, so we go up here to the pound. And let's see where we at. It's like a warning light maybe coming up. Alright, so I'd be looking at this right here. If it breaks, you could open it up even if you don't have all this and just watch it. But if it breaks, 64.50 is where it would actually trigger. So this is a nice thing, and again, this is just about to be released, but I could put, you know, 64.50. You know, don't buy for more than 80. That, I put 80, it's a limit order, so it means this price or better. So how to get better? I'm just trying to put, you know, I just want to make sure I don't get filled like at 96. So, because the market just flies up in, you know, half a second. So we'll put that one in. And this is why I'm really excited about getting the ticket size increased, where you can do multiple tickets at once. Because yeah, like one of the errors on it, like the program put on indicative index on limit, but it's actually on trigger price. Just stuff like that that's going to just confuse 100 people. So we're getting just a small little updates done. I'm hoping to have them out Monday or Tuesday. So, which is actually when I'm hoping to release it, Kelly. If not, then I may actually release it to P3 and active paying elite members earlier. And just let them use the beta while we're working on it all. It's like our US tech just got filled for us. And let's go ahead and put this one on. Let it work. So what I noticed right here, see it said order received. It's like bam. So put in the order and it got us filled. So we put in an order of a worst price of 75 and it got us a 73. So actually I think we put a worst price of 80 and we got a 73, so which is pretty cool. Because what it's going to do, okay, this is just to explain this to you. If you haven't been on one of the last webinars where I've walked through it, what it's going to do is it's actually going to use a couple parameters in submitting the order and basically try to help you get the best price and not get hosed. So tricky combination sometimes. And so to put all those pieces together, let me show you. I've got to move this ticket. I didn't pin that one. Okay. I'm saying when this hits 64.50, then place a buy order at 10 ticks above the then market price. Okay? But if 10 ticks above the then market ask price is greater than 80, like let's say the market price is 75, so 10 ticks above it is 85, then put my order in at 80. Don't put an order in higher than 80. So let me show you what happened over here. It's like right here, we said, when the market hits whatever price we had in there, I'd have to go back and look at it, then submit it at 10 ticks above the then market price. But do not submit an order to buy higher than 80. So what would happen is when it hit it, the market price was, let's say, 65 or whatever, submitted it, let's say it's 60, well, let's say 65. Let's say it was at 68. It submitted it at 78, okay? But then it got filled at 75.5. So basically, it just went for the best price. So I'll get a better explanation for you. But the bottom line is it's going to say, give me the best of the two. So if 10 ticks above the market is better than 80, give me 10 ticks above the market. If 10 ticks above the market is worse than $80, then give me $80. Let's see here. All right, so now we got a pound, and I want to close that ticket out so I'm not using up my open ticket allotment. For some reason, somebody thought it would be a good idea to limit. I get rid of these here. How many tickets one person could have open at the same time? Seem to be passing 5 this morning, so that's interesting. Okay, so let's keep going, see what else we can find. Okay, Russell, nothing. Aussie, nothing. Silver, nothing. S&P, getting close. 1634, 1633, we're at 1633 right now. We had a predictor entry at 1634, so sorry, 1834. Yeah. So I always like to focus on the in the monies on those. So that would be in the money at the point they got there. Convert it. 1834, you get 0.1. And you could even say like 0.25 if you wanted to, because technically that's how S&P ticks. But we'll see how that works out. And then worst case limit, yeah, it's going to round it out to Nadex. So that's cool. They built all rounding, and that was a feature that was causing a bug. People didn't put in the right tick price. Worst limit, $80. So get me in if the S&P breaks 1834, basically in a quarter, 1834.3. Then put in an order to buy this contract at 10 ticks above the high of the ask. Ideally, as long as I have the best price there, I'll get filled at whatever the price is. So if the price is 60 and I submit 70, I'm going to get 60. But don't submit my price for better than, for worse than, $80. Okay? And then I just did activate. And then now the trade's off and running. So it's doing its thing, it's working. and it'll expire at 2 minutes before expiration, so you don't have some trades sitting out there in the 2-minute dark zone. Let's see here. We got that one working. Let's see if there's anything else that's better happening now. Now NASDAQ. Yeah, that one got filled. Okay. It was about NASDAQ actually was already triggered. So, which is what is sort of cool is when that trade triggers, I can go back, and if we put the S&P back on there. Because right now I really don't. Thinking about it, if I'm already in euro dollar, I don't really need to watch euro dollar anymore. But I can go back up and I can pull it up. I can look at it and I can see, what are all the choices that are available now. Because the other one was to get me in immediately, so I didn't miss out. And so I could go. Are there any other ones that I like that are better? Because sometimes it'll pull back and I'll even see a better strike. So sometimes my second entry. Remember I said I usually like to go in on 1 and then add 2. Now when I say 1 and 2, I mean whatever my normal contract size is, I'll double that. So if your normal contract size is 10, then maybe do 5 and then 5. If your normal contract is 100, maybe you do 50, then 50. Okay, if your normal contract size is 1, then you do 1 and 1. But what I'll do is I'll go in, I'll put that 1 in, then I'll sit back, I'll watch. Maybe I'll just grab it. I'll go, I love that strike. That's perfect. But I may also go, I'm going to let this thing retrace back a little bit. Because, it'll go up, it'll hit your price, it'll pull back some. And either one, I'll get the same strike at a better price. So it'll sort of dollar cost average my binary. Which is not the same thing as dollar cost averaging on stock. Because it's still above or below, right? A binary is above or below. But what I'll do is sometimes I'll dollar cost average my strikes. So if it drops down maybe a couple points, Russell's 2 points wide, then I can actually throw on another strike lower. So, or maybe 2 strikes lower to help hedge that off. And so let's see. I'm just trying to give you all an example of just a lot of trades. I haven't done a lot of trades live in a while in front of a bunch of people, so that's just trying to flow through them. Yep, you're right. We got to set some take profits. So at 73, usually I'm pretty happy if I can get at least $20. Okay, so this is where I say take your profit at 96 or 94. If I got filled at 73, that's pretty nice. So I could set it to say 93 if I wanted to. Whatever. But sometimes I got at 50. I could have just got out of 50 at 70. Made it a really fast, easy trade. A way to scalp. But so we put that in there, set that take profit, let it do its thing. We'll go over here, we'll do the same thing. Nothing like having a winning trade turn into a losing trade. That would have won if you would have taken profit. So just set it on in there, let it do its thing, and leave it alone. But do have your take profit plan in place. And then, like in this one, I messed up. I did 2 of them. I'll just click the button. And see how, let me show you this. See how easy this would be on the platform to maybe not even notice, especially if you had 10 different contracts going, maybe not even notice that you did this twice. So it's right here. It's really obvious. You have 2 contracts to sell at 94. Now, I'm only risking $6 if I'm selling at 94. So if I got short 2 at 94, it's not like it's going to kill me. But I am paying, I'm giving up profits. I'm paying commissions, or exchange fees, whatever. So let's cancel one of those out. Okay. Okay, so we're going to keep going. Great start. Just a lot of chop right now. Come on. Okay, oil might be setting up. Now, here's the thing about oil. So, this is also little lessons in between. On oil, the strikes are pretty wide. So now the intradays, at least they're 20 cents. So that's that's definitely an improvement. The dailies are 50 cents wide. That's why a lot of times you'll see that we have a hard time getting trades filled on core. But anyways, let me stop talking for a second. Look at this one, 9. Okay, so it needs to break 96.29. What do we got that's in the money? There we go. Alright, so 96.29. Decimal places do help. Worst limit of 20. Right, because I'm selling. So I'll buy worst limit of 80. And when it gets there, let's get on in. Okay? But now I don't have to sit there and babysit this stupid ticket the entire time waiting on it to get there. Okay, now what else we got? We got that gold still working. It still looks possible. We'll see if it breaks. It hasn't triggered yet. We may end up getting a short on the indices where we get along. Let's check out the Russell. Get ready for that one. Russell, low, 1147, 48, 149, 150. Okay, so on the Russell. That's rare. Okay. Predictor was right at the strike. Sticking ticket limit. I want to play so many more trades and it's slowing me down. Like, which one did it close down? It closed down my gold trade. Alright, well, I'm going to abandon the long S&P. Go back and grab my gold. But first, I'm going to set this order. I think we're closer to this getting filled than the long S&P one. So I'm going to set it to 1147.5. I'm going to set it for 20. Okay. As another note, yes, you could. When the predictor strategy comes out, you could go, you know what? I like the idea of making a lot more money. And you could go in and throw the out of the money on immediately. Okay? You got lower probability because the price action hasn't determined it yet. But by doing, like, say, this trade, you'd make $76, $80. You're risking 20. I can make $20 back in no time at all. It's not a big deal. But you're sort of jumping the gun to bank on the, hey, the market says if it breaks below this price, it's probably going to stay below this price. That's what the predictor says, okay? So, what you're doing right now, if you hop in on it early, you're going, I'm going to take on a low-risk trade with the expectation that it really is going to break below the price. So that's sort of, you know, just a modification to the strategy. So we got so we could add in both of them if we wanted to. So just to show you that way, whichever one you would prefer to do. then hit activate. Gold one's still working. Not going anywhere yet, but I may want to put it back up because I closed the ticket down because I opened so many tickets. Gotta get rid of that one. That's another one that I got. Get rid of that. Okay. So we got gold working, we got a pound working, we got a crude oil working. Got a small cap on already. Got a US tech on. Got a euro dollar on. We just had to take profit on this one that's pending. We'll have set this for, you know, whatever we want. I mean, we can go for the full thing, but we could also just set it for about like 29 or whatever. I mean, that'd be still a $50 profit on the trade because we sold at 79. So we'll put a order to buy that one back at 29. Be happy with that one. Call it a day. And let's see here. Still Aussie, silver, S&P Russell sort of on the same wavelength right now. Dow, not doing anything. The indices are fighting each other right now. So, let's see. Copper's just leveling off. Let's see here on copper. Which can make it actually a great trade because it's not moving a lot. That's why I do these at night. If we can find a strike. See, that's the next trick. Are there any good strikes? It's like 39.1 to 31.60. I mean, that's a massive gap in price action. Let's see here. See something on NASDAQ. that. Yeah, you have to actually, Copper, you actually have to pay for the data subscription to get access to it on CQG. Right, and Sherry, so a question, which is a great question, Sherry. Why am I going long on this when the Apex is saying go short on that? Okay, understand, this is a 1 hour trade. Okay, the Apex trade literally could be hours, days, whatever, right? This is a 1 hour trade. It's based purely on binary momentum, on the expectation if a price is broken, it'll stay above this price by expiration, by a tick. So that's what this is. This is not the same as like the Apex where you're going in and you're trading the trend so much as like trading the trend, riding the trend. We're just saying, hey, but when this binary expires, whether it be today, this hour, this week, if this price is broken, we expect it to stay above this price by the end of this hour, this day, this week. So it's not an intra, we could have literally like a short trade and an up trade. We could have like 5 short trades and 3 up trades and 2 short trades all on the exact same day on Apex, right? You could have all that. Whereas you could even have the same hour. You could have a short trade, it goes down, you take profit, and then turns around and goes long. You get a BMX reverse, you go long, you take profit, all at the same time inside of an Apex. So it's really, the Apex is about catching all of the price action. This is really a very uniquely focused binary strategy, simply trying to maximize profits for just the benefit of the in-the-money premium collection. It's 2 different ways of trading. One is grabbing trends, one's grabbing momentum with the edge of a binary. Without a binary, the strategy would not be a good idea. But with the limited risk of a binary, with the premium collection benefit of a binary, it's a good idea. So, Danny, actually, so far I have not. Now, we do have one that we've been, it's pretty cool, and obviously I'm not making any disclaimers or, whatever. But, John was going through, he was testing stuff out on the US yen, and now the challenge when you do like a back test on a strategy is you can go, okay, this would work as long as you could get that fill, right? So notice how like earlier in the morning I was like on Aussie dollar, US yen, and I'm like, we can't even get anything right now. So if you could have got all the fills, which is a big if, because you can't. But we did have one where we had a stop loss and not a stop loss, and it was like 95% profitable, literally. Like, out of 96 trades, like 4 lost or something. But again, that's if you were able to get all the fills. So if you weren't, you wouldn't add on losers, but you could add, obviously you'd reduce your winners. So it wouldn't really take much to still be a good strategy. It's just a matter of being able to get that fill on that contract. And we're getting a lot of them. We're not getting all of them, but we're getting a lot of them. Let's see here. Yeah, we need to set a take profit over on these small caps. So again, a thing that'd be very easy to overlook inside the platform. So we sold. Let's buy back at. You could say 6. You could say 17. We wouldn't have to go that far down, and 17 would still be like a $40 profit, which would be great on premium collection style trade. But short answer right now is no, I'm not using them. So they could be used. Because the whole idea is I'm allowing for, if I use a stop loss, obviously my win rate would go way down. And we've won so often that it's hard to justify doing it. Okay, let's see. So we got that one in. The stop loss reduces your risk, but it also will increase your losses. Like, it's sort of weird, the dynamic there. I don't know if that makes sense, but. And I'm only talking binaries. I'm not talking, obviously, futures and Forex would be insane to either not use a stop loss or not use a spread to hedge it off, or whatever. Okay, let's see here. Scrolling through charts. Trolling for trolls. Trolling for trades. Dollar franc might have a setup. We got over here on dollar franc, we got an expectation that it'll close lower than 89.96. So check that out. If it breaks, okay, 89.96. Don't sell for less than 20. The expectation is it will stay below that. Now, a lot of these we take, there's been quite a few of these we've actually taken profit before. It's even come up. So, but let's put that in. It looks like it's moving in our direction. See if we can get filled on it. Okay. So again, 89. We're looking at the $9,003 franc. If it breaks below, if the indicative, not the chart, the indicative breaks below 89.93, then we'll look to short it for not less than $10 less. So like right now, if it's submitted, it would submit it like at 16, okay? But since I said a worst limit of 20, then it'd pop up and it'd put it in 20. So because it's not going to submit it for less than where it's at. Okay, we just took profit on a trade. Let's see, what did we just take profit on? Yeah, so we just bought back, or sold back our euro dollars. What do we buy them at? Where are they at? Oh, nice. That's interesting. Oh, it is submitted. Okay, it's working. Okay, so maybe it's descent. See how it blew right past it, and now it gets down at 11. This is really important for you to see. So it's like at $11 now. So what it did was it submitted my order at 20. Otherwise, I'd have been like filled at 11. So it's helping protect me there. But yeah, euro dollar. And we just took profit on our small caps. Okay, those we had like an average fill of like 53 or 57. That's what it was. Yeah, it's 53 because we bought back. What do we buy back at? Because I know I put it 40 bucks lower. So okay, we had an average fill price of 57 on our small caps, and we bought back at 17. So we had $40 times 2, so that's 80 bucks profit. So we just took that profit. And then we took a profit on our 2 euro dollars. I'm trying to find the fill price on here. Sold. Where is it? Hold on. But even on the right page. Those were earlier, right? Yeah, 10. So yeah, we're later. Oh, the order I sent and canceled. Okay. Yeah, I remember because I had that extra order in there. So it filled 73.50. Okay. So about at 73.50, we sold out at 94, so 83.93. So we basically made 20 bucks times two. So we made another 40 bucks on that on that one. So we made 80 bucks on that one, and yeah, I mean basically just going. Okay, so let's see here. Dollar Franklin's still working for us. It's below it. We're there, but that's one we're probably going to miss out on unless it gets a little bit of a retracement. So, because the chart just sort of bounced, like it just basically went through it, and the price was so low on the binary. By the time it got there, it was not an acceptable price for us to say, I'm willing to put my money, on that trade. So, I mean, now it's done at 50 cents. So, at this point, I know I would have taken profit on the trade. So, here'd be another, binary trading tip or any trading tip. If a market reaches the price where I'd be willing to take a profit on it, then it's probably advisable just to cancel the working order. Okay? So, I mean, I don't want to be in that trade anymore. So, because I would have been out of that trade. If I sold it at, 80 bucks and I would have bought it back at 6, I'd be out. Okay, now let's see what else we got. Everything's just hanging out. Yeah, we're at deviation levels on oil right now. There's a danger note on that one. So like right here, here's Terry's chart from the trade room. So if you're from the webinar room we're watching, yeah. So oil's like really close to a deviation. We're looking at selling the 96.35, which that's what is decently above it. But Terry, suggestion on your chart. I would right click, go to indicator, and I'd add deviation level, not the levels, but the deviation level indicator. And what that'll do for you is it'll allow you to see if that actually has hit a 2D, like broken a deviation or more. So yeah, see the apex dynamic deviation, the one right above levels right there. Yeah, right there. Click that one. Yeah, click new. So after you click deviation, click, yeah, there you go. And then back out a little bit so you can sort of see what happened. Like zoom out on your chart. On the time frame. So I grab like 850 and grab it over towards like 1150. So to the price, if you grab the time at the bottom, you'll be able to zoom out, but what you'll see is the yellow line is a deviation. The blue line is actually when it passed the deviation. Yeah, so zoom your time right here, like out. So it's like you click, you hold 850, and then you just drag over. And what that'll let you do, like I said on that, is see when that happened. But it'll allow you to see when the reason I like it is because it gives me that high to low. And if I know a deviation is 1.02, then I know that, 1.12, I know that 2.24 is 2 deviations. So I've actually already hit 2 deviations on the trade, as an example. Okay, keep trolling for trades here. 5 minutes. Is there any possibility we're going to find anything? We'll see. You never know. Sometimes right at the last minute. Gold, gold, gold. This might be an EPC. I've actually seen these turn into EPCs. Check gold real quick. 6 minutes on the clock. Is it a trade that we're interested in? I'm watching it. I'm getting ready. Go, ticker counting down. Look at that. Jumps on me the second I take it. So you can chase it, but you got to know what your limit is on chasing. So what is my limit? Like, what's the highest I'll buy at? So a little review question here for you. What is the highest I'd be willing to buy this contract at? On sort of like this premium collection strategy. That'd be 80. So I'm not buying for, so if I want to adjust the order, I can adjust it to 80. I can amend that, but I'm not going to buy it at 89, 95, 97. I mean, there it goes. I mean, the profit, the trade's basically almost done. And I know I'm going to get out, okay, when the market hits like 96. On that trade. If I see it hit 96, then I'll cancel the order out. Okay, there we go. Got filled. I put no limit order in. One of the things I was taught a long time ago, and I'm not saying the trade's going to be perfect or work out, but by the way, if I am this close, then yes, I will use a stop loss. This close to expiration. And now, basically, I have a stop to get out, and I put, maybe the worst limit to sell is 20 or whatever. Activate that. So now I have a stop loss on it. If it gets down to 1225.1, it'll get me out. I'll take the small loss, whatever. But I'm also going down to the 2-minute time frame here, so we're about to run out of time on the trade anyway. If you're not comfortable with that trade and you got 2 minutes left to go, you don't like it, you bail on the trade. You just take whatever loss you got, 10, 20, 30 bucks, because otherwise you could lose all 80 if you don't like it. So, there we go. Okay, got me out of the trade. That's okay. Got 53, bought it. 80, so lost 30 bucks on the trade, move on to the next trade. That's better than losing 80 on the trade, right? So, that stop loss definitely did help. And, yeah, see, it's going down. So I just saved myself a lot of money by being willing to use that stop loss. One of the other benefits of having the stop loss in here with the new ticket is we all have that tendency, right, to give it a little bit more to see if it's gonna come back. And if you trade it for any period of time on these binaries, you've sort of seen that when you give it a little bit more, sometimes it seems to go a lot more. Like it goes down from like 50 to 40 to 10. And now there's really no room left to give more. So that does become expensive. And so what this does is it allows you as a trader, me as a trader, to be more disciplined by using the stops. Say my scanner looks different than yours. How does my scanner look different than yours? Now my plugin should look a little different, but my scanner shouldn't look any different at all. You should have the exact same scanner I have. No, this is like I'm just throwing up, like somebody asked me to throw up an example of a chart. Now you're talking about the elite charts. The elite charts, no, you want to have access to those. So the elite charts are right here. This other one is not even. I mean, there's so many of them happening because there literally could be several hundred a day. That what we're doing is to actually make it a lot simpler. Is we're just going to build it into the scanner itself. Okay. So that way you wouldn't even really have to even be looking at a chart. Now you could pull up the chart on the ones you want to do, of course, all that. That's always prudent. But to make it the sells and buys, then that. What do you mean by, okay, question. Your sells and buys are in different places than ours. What do you mean by sells and buys? I need to clear my cache. Your buys are on the top of the column and mine are on the bottom of the column. Okay, so understand there's spread scanners and there's binary scanners. And it depends on what filters what filters are you using. I have 5 to 95 and 0 to 1 hour. So is this what you're seeing right here? It looked like my browser was like sticking for a second, so I did. By the way, I do control. If you ever see something that's just not working on any website, our website, any website, you do Control Shift Delete. Or sorry, Control. Isn't that it? Yeah, Control Shift Delete. Not Control Alt Delete. Control Shift Delete. And then you can do like clear all browsing history, cookies, cache. You have to log back in, which is a bit of a pain. But doing that will basically clean your browser up. It'll get rid of any of the old junk. Sort of like rebooting your computer, you know? It's one of the fix-alls. It's even better than rebooting your computer as far as for your browser, because that will fix things that rebooting your computer won't fix. Kelly, keep talking. Tell me what you're seeing that's different so I can help you out. So I'm trying to figure out what you're saying on what's different. Do you have your settings the same as mine? Do you have 5 to 95, 0 to 1 hour? All? Okay. And then are you selecting, let's just say, S&P 500? So if you got 5 to 95, 0 to 1 hour, S&P 500, then this, on the binary scanner, then this page should match your page right now. Okay. So, all right, you're good. All right, yeah. So the biggest thing is the big thing to do is always start off with either live or demo. Now, obviously, live and demo can vary. So if you're on demo, you may see something different than me because sometimes the strikes vary. Okay, but live and demo, and then reset filters, and that's just the biggest tip I can give you because I've got some really good feedback from traders, and if y'all have these ideas and you listen in the help desk, what was your? Because I know we have a lot of traders on right now that have been trading for a while. What was your initial aversion, or even maybe current aversion to using the scanner? Because what I found is when I find out what that is and I explain it to somebody, they're like, "Wow, that makes so much more sense," and now they're all about it. So, one trader told me that they avoided it because they thought they had to have all these filters mastered before they could use it at all. Okay? And I was like, no, I mean, you could literally do nothing and see everything. This is still better than clicking like 5 different places on Nadex to see like every binary. You could have no filters on at all. And so like my first filter that I'm going to start off with that just makes sense to me is I want to get rid of these $3 and $4, risk binaries. The ones that like if I sell for 96, I'm risking 4. So I just want to get rid of those because I'm not going to trade them. And by doing that, I limit a lot. And then probably the next thing, I'm going to go, well, am I restricted by time? Maybe my job only allows me I can only trade for an hour. I'm going to sit down on 1 hour tonight, I'm going to trade. That's it. Well, then, I got to say, if I have to, either going to set and forget this trade, or I want to see trades that are going to be done and closed by this time. One of the two. So if I'm going to be doing that, then I can say, okay, 1 hour. And then I can select what markets are available to trade, open and closed right here. Okay. Now, if I say 1 hour and it's nighttime, I may not see anything because, so if I show 30 minutes, like there's nothing that's going to expire in 30 minutes or less. Okay. Well, at night, maybe, there's no intraday binaries happening. There's only dailies. So if I say 1 hour to expiration at night, I may not see it. So that's like where somebody may mess up. But if you'll just go like 5 to 95, that should never mess you up. And then the next step is just going, okay, I'm going to apply one filter at a time, just one, and see what it does. And what people don't realize that they're doing is they're already doing this. They're already filtering their trades. Because you're logging into the platform, and either you're logging into demo or you're logging into live. Well, that's the very first filter, right? Live demo. And then the next thing is you're probably thinking either spreads or binaries. Well, we got spreads and binaries. And then from there, you're probably thinking about what market or markets that you want. S&P, small cap, tech, maybe all 4 of the U.S. indices, whatever. Okay? And then from that point, now you're going, well, do I want weeklies? No, so you're probably going to open it. Do I want dailies? Maybe. Do I want intradays? Yeah. Just. And so you're going, and when you go down to the intradays, and you're going, okay, well, do I want to risk more than $30, or do I want to do premium collection, or what do I want to do? And so you're actually hopefully you're going through these filters in your head, and you're not just going, which one do I think looks pretty, and end up picking the contract that has nothing to do with the trade strategy you're using. And so my hope is that as people can as they use the scanner, it'll sort of force you to think about why that's the right contract for you. And that will help you with the filters because you're thinking about it versus just randomly picking. Because I think that's a big, easy mistake that you can fall into. It's just, I'll take that one. Like why? Because if you know why, then you know how to set your filters. Okay? But okay, so let's go back. We'll see if we can do maybe 1 or 2 more trades. If I see anything. We may not, though. We may have wrapped it up. We got some good trades on that. So, overall, some nice profit. Let's see here. I'm scrolling through. We don't have any, oil's actually potentially triggering right now. Let's see, we got an oil. And nowhere on that 2 deviation level. But I'm still going to check. Yeah, I'd be looking like at the 96.46. So I'm going to grab that contract. Okay. I'll grab 2 of them. There we go. And then I'm going to set a take profit to buy them back at, I don't know, $6. There we go. And since I know we're at a deviation level, let's see here. We'll Terry's chart back up. So we got this deviation level. We're really at a pretty solid support level. So, you know, a little bit nervous about the trade, but if it breaks this, it's just going to fly down and we're going to make our money in a matter of like a couple minutes. Okay? So, you know, if I'm real nervous about the trade, then to help limit my risk, so I'm not risking like $75 a contract, then I could go in and I could set the stop order. Ooh, that's working now. That's cool. To go in and exit if the price hits, you know, like let's just say above 96.46. So like 96.47. So if it breaks the strike, get me out at a price not worse than, you know, $80 as a stop loss. Probably get out at 50, so I may lose $50 on the trade. But you know, like I said, there was a warning. I got one from Steven saying, "Hey, be careful on oil because it's right at that trade." So if you're willing to take that risk, right at the deviation level, which, you know, may or may not work, then, but I can put this in here, and now I can manage my stop. Okay? So I got quite a few contracts on. I got all 4 on. I can go in. I can set my, you know, stop to go in and do that. I can also set my take profits. So I meant to set my take profits in. Let's set the take profit in right now to buy back those 4 at, I think it's going to break down, but just looking at several things at once. But so I take profits on those 4 to buy back at $6. But if they don't, I have a stop loss to limit my risk. So now I have a take profit plan and a stop loss plan. Now, what's really important, what do you think? Just an initial thing. Okay, if I know I have a stop loss order sitting up here, okay, and I have a take profit order sitting down here, and my take profit order gets triggered. Now, future versions will have what's called one cancels other. Currently, we don't. This will just be, I mean, just to have stop orders period is like a huge step. So what do you think you probably need to do if you get your take profit filled? What do you think I need to do with this ticket right here? What's my next step? If I get my take profit, it goes down, it hits $6. I'm all excited. What do I need to do? Should I just leave on my stop loss, even though I've taken profit already? Do I want to end up making this thing buy out at 80? Or, yeah, exactly. I want to close the stop loss. So I took my profit. I don't need a stop loss. If I leave my stop loss sitting there, then I could end up getting filled on both. And then what if it goes up and hits my stop loss and then comes back down and, you know, trade wins after I already won, so like it would have won twice. Then I could basically give back all my profits. So I would just want to make sure that when I do get, you know, when I'm flat on the trade, you know, then I want to get out. Sort of like earlier when I said, you know, if I put in an order and it submits it at 20 and it gets down to my take profit, let's say at 6, then I decide to go ahead. It's like, you know what? It hit my take profit price already, so I think I'm just going to go ahead at this point and, you know, cancel the trade out because my trade's over. It got in, it went down to my take profit. You know, that was my trade. I missed it. Oh well. And move on. So now one of the advantages of doing premium collection is time is in our favor, especially during this last hour as it exponentially speeds up. So, you know, if oil sits flat, great. So now if it pops up, and I mean, oil can easily pop up 10 or 15 ticks and we're out of the trade. But now I don't have to be like, you know, quick draw and crawl and have my finger on the button and, you know, heaven forbid I go to the bathroom or sneeze or look at an email where I'm watching other charts for other trades and I miss out on it. So let it do its thing. Let's see here. Alright, that over here. Let's see what else we got. Aussie might have a trade coming up. Probably gonna take off here pretty soon. So got a show coming up. So I put in a 89.19. If it breaks below 89.18, then let's grab that one. Okay, if the indicative, not if just your chart breaks below it. Alright, that one's really close. See here. Now the next step too, Kelly, is we'll actually be incorporating this into P3 signals. We're going to start sending these out, which will be pretty sweet. You know, maybe like 5 or 10 a day. I mean, we've done like what, 10 or 20 in the last couple hours. So if we do 5 or 10 a day, maybe we're following on instrument doing it. $382. Let's see. And we're probably going to start by focusing, my guess is mainly focusing on evening, and then we'll probably add in some during the day also. And I mean, one thing I will tell you is, I mean, part of the strategy's worked really, really well, but you do got to keep the trades going. You know, it's sort of a, you don't want to just like take one and that lost and, you know, go have a pity party. You know, you need to, you know, keep the trades going so they take care of each other. Okay, just checking something. That looks good. That copper one would work. I just don't think that by the time it gets there, it's going to be worth anything because it's so wide on the strikes. Silver and copper are harder to trade on the binaries just because of how wide the strikes are. Like the trades I do on them usually work really well, but maybe only a half or a third of them get filled. Here's an example for you on Aussie of the order we submitted was to fill us if it breaks below, if it hits or breaks 89.18. We've already hit it and we've broken below it over here on this chart, right? We went down to 89.17, but it's just been a couple spikes. There hasn't been actually that many trades quotes at that price. Okay, so it hasn't yet filled our order. So again, downside, yes, I'll get a little bit less money because it'll move further by the time it does fill me. Upside is it's not going to go down a couple ticks and and fill me and then reverse because I'm using that indicative, so I get that little bit of a, like I said, it's almost like a quote delay, but it's more, it's not so much time as it is trades. Like, make there be at least X number of trades before, at this price level, before you actually submit my order. So we haven't got in on that one yet, simply because we're waiting on it to break down there. Now the advantage on the wider strikes, if you can get them filled on like oil, silver, copper, the one advantage is they are wider, so they'll be further in the money. So that can actually benefit you. Let's see. What else do we got? That's the also one I was just looking at. All right, now it filled. Bam. Okay, now we're in. So, it's submitted at 35. Let's see what it fill us at. Okay. Filled us at 38. So, basically 10 ticks below. It's quoting at 45.50. It's submitted it at 35.50. Okay. We got filled at 38. If we would have submitted like right at where the quote was, we would have got filled. So that's how it's acting like a stop order by having that offset to help us on that fill price. So now that we're in there, let's set a take profit to buy back at, let's see, this one we got fill at 38. So since we're trying to close this out, semi early, since the webinar is going to come to a close, I'll just put it like it. Let's see here. Let's look at the strikes. This is okay. Here's another good little side tip note for you. I'll go over here and pull up Aussie. I can see sort of what I should expect this thing to be at. So expecting a buyback at 15 is pretty good, right? Because like, see how the 89, we're at the 89.19 right here. Let's see the buy price on the 89.29 is 15. So if I want to get out a little bit early, I mean, if I want to wait, I can get out at 6. But if I want to get out a little bit early on the trade, then I just simply set my buyback at, say, 15. If it moves down 10 ticks now, or even over time, it's going to fill me. Either way. Okay? So I'm going to go ahead and set that as my take profit order. And just to make it an easy, faster take profit order. Ready to go. We'll see how these work out. Let's see if there's anything else. Now this is more sort of showing you what the stop plugin can do for you. Introducing the predictor strategy that will be coming out soon. But it'll be more of the goal is to, we'll probably start it as signals, and then the next step will be we'll put it in the scanner. Because there's so many of them, it's just, you don't want that many charts open. Unless you have 16 screens like I do, it's not really going to be helpful for you. So we're going to put it all on the scanner, and then you'll just be able to go on and select what instruments you want, and it'll show little arrows, and that's the ones that work. Let's see here. And Aussie has been doing a major turnaround. Let's see what we got over here. see here. Take a screenshot. All right. So we'll set this trade up. And prediction breakout on this one is, if it breaks 93.49. Force limit of 20. And let's grab a couple. There we go. Alright, so that one's working for us. And then let's see what else. Trying to go through. That Aussie and we're working. Let's see if it gets filled. It's getting close. Yeah, it's definitely spiked down. It just hadn't brought the indicative low enough on that spike. So it went down to like 48. Urian's doing the same thing. So we got the Euro Yen one. Which, let's see here, where we at? 143. that's actually one that I'd take already, like right now, based on the price. So we'll grab that one. And that one went to profit quick. Let's see here. Trying to give you all as much variety as I can in this period of short. I mean, I guess it's a long period of time, but somewhat short period of time. So that closed out our oil trade, which was off the deviation, which was one that we were concerned about. That's why I used a stop loss. So we're going to close out our take profit on that one. Cancel that take profit order. It's nice to have that stop loss because it's just there working for you, doing its thing. Much better taking a $30 hit than an $80 hit. Let's see here. I think we're about to see what else we got, but let's see here. Trying to see if there's anything else, but right now the things are sort of, moving along, moving along. Got that Aussie yen's moving down, so that's in our favor. What are we up at? 89. Maybe it's like right there. So we set these out, waiting on them to take profit. When they do, I get a little movement now. Hopefully at this time of the day, like we'll get a little bit of a bump. It's enough to take the profit on these. But I mean, usually what I'm doing is like I did at the beginning. I'm going through and I'm just flying through and finding all the contracts. And sometimes I'll take like 8 trades, and 7 will win, or maybe all 8 will win, or 2 will lose. But the net result is that all will balance out. So that's what I'm trying to accomplish by. That's when I'm hedging. That's sort of what I'm doing in that sense, by doing multiple trades on the same contracts across the board, and I'm basically trying to hedge out by doing multiple trades. So if this one wins and that one loses, it helps cover it up. Very rarely does it just go like bam, 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 like all of them. Because not everything's perfectly correlated in the same direction and all that stuff. Any more questions about this strategy? I mean, and again, I know we're not going totally into like just details on the strategy, but just showing you like here's a way. If you're trading binaries, you can do a lot of them. Time Scalper, it's been about 85 to 90% on Time Scalper. Now that's not been. This is not Time Scalper. This is like binary predictor. I don't know. We gotta come up with some name for it, I guess. Time Scalper though it's been doing really well, but it's not simply because like you followed the arrow. Okay, you followed the arrow and you chose the right binary contract. Okay, so, but yeah, on the Time Scalper one, I mean, the trades that John's been doing, going through them and doing them, like not in back testing simulation, but trading forward. I mean, he's 8 out of 8, 9 out of 10, 8 out of 10, in a night. But it's not simply following the arrow; it's following the arrow and picking the right binary contract. So that's the big key on it. Is we're gonna have to really work on teaching you how to correctly pick the right binary. And it's not that it's that hard. It's just like this is the worst strike you'd want to buy or sell, and this is the minimum premium that you'd want to collect. And now you got to go, well, what if I could get like 2 more strikes away for the same, maybe the same or better premium? Would I rather have that? If I can make $20 with it being 2 strikes away, or if I can make $20 with it being 4 strikes away, but have to take on 2 more hours, I might actually still rather do that. Because time's now, I still have time. Time's still in my favor. But the big thing is direction is in my favor. And what I mean by direction being in my favor is, you notice how these things move really, really fast when you get closer and closer to expiration, right? So I mean, they'll take off. Well, further from expiration, they move slower. Okay, so you actually have the ability to better manage a contract that has more time till expiration. It won't move against you as fast. Sort of that whole gamma thing. If we went to a whole, maybe I'll just do an option lesson one day where I talk about all the Greeks, but it doesn't move as fast against you if there's more time, but it moves faster for you if there's more time or less time. Because in both cases, like, it's good for you to have more time. That'll move really fast for you if there's less time, but it'll still move fast. It'll exponentially increase in speed, and so it's just basically making sure you're picking that right binary. So it's not just like, oh, I bought because it said buy, or oh, I sold because it said sell. It's bigger than that, and we're finding that's really the key to a lot of these strategies. It's not just your up down arrow, right? It's which contract you choose, and so I want to make sure that we totally equip you on the best way to choose those contracts. And so part of what we're doing is we're going through, okay, what if it was at this point, this point, this point? How does that change? What if we did this risk management, this risk management? How does that change? And one thing John noticed last night, he was looking over a lot of my archives and going through, and he's like, one thing I noticed is that any kind of premium collection strategy that I do, I end up getting more and more and more conservative on my binary contract. Like, I'll end up either taking less premium or choosing more time. And because the probability, either the payout's higher, the probability so exponentially surpasses that. And that happened to me on credit spreads when I learned those, and my mentor taught me how to do a credit spread. I went in and, he taught me how to go for 50 cents. And my first thought was, what if I went for 90 cents? So I went and back tested the thing. On 50 cents, I found the stats. And then I went back tested, and I found, like, what if I did 90 cents? And I was like, oh, wow, I actually lose a lot of money. Even though I make more, I lose more because I lose more often. And then I went like, well, if I lose more often when I go for more money, what would happen if I went for less money? And so I started looking at, okay, what if I just went for, like 30 cents instead of 50 cents like he was teaching me? And I found that I won like a lot more often. And it didn't really have that, like, my net P&L was a little bit higher actually, but my win percentage was a lot higher. So overall, it actually didn't affect my bottom line too much except for the upside. But I didn't lose as often, which was obviously a great thing. And so I don't know if that helps, Danny, but the win percentage is not simply. I just want to make sure you understand the win percentage is not simply a buy-sell indicator. So it's two pieces: it's buy-sell and then which contract. So with him doing that and with him choosing those specific contracts, he's been, consistently between 80 and 90% for the several weeks in a row. And I've known him for 15 years, so we go through and testing out stuff like crazy. Let's see here. Those two trades are going. I'm sort of like, come on, just get down there and take profit. Yeah, the gold one I was looking at, that was look like it's probably going to do well. It's already in the money now. Let's see here. And coming up in the last bit, that looks good. We're starting to break down on most of the indices. Nasdaq is choppy, so I'd be like leaving Nasdaq alone. The thing can't figure out what direction it wants to go. The S&P's been going down. Dow's been going down. We got Russell. Get rid of silver. We can't get it filled half the time anyway. There we go. Okay, Russell oscillating a little bit right now, but let's see. All right, Nasdaq's starting to follow suit. And we'll take a quick look at the indices here with the last 15 minutes. Get on down there. Well, fill those. And all right, we got S&P. Everything woke up just now. Yeah, so that'd be my preferred contract. It's already like at $8. Dow. What do we got? Really? That's all there is. Yeah, that's all there is. Not really my trade. I'd rather have it a few points higher. I mean, that's not a bad premium, but not really the one I'm looking for. Let's see here. Get back up here and narrow this thing down to hourlies. I was just like there something wrong? That there really just was nothing on there. That's funny too, because people think like there's nothing showing. It's like, well, there really is nothing showing. there's nothing that meets the filter. Let's see here. Scanner's not off. There's just binary contract. There's no value there. I've been on the line. Yeah, now it's moving up. Yeah, that's why I didn't take that 16,375. So it's pulling back up against it. I was like, that is not my contract. So one of the things I was taught by a mentor of mine was, yeah, you get to choose where you get in a trade. The dog is outside, actually. There's 2 border collies, so they have a lot of fun. But we get to choose where you get in a trade, and but you don't get to choose where you get out of a trade. Okay, and it's sort of like, if you got whitewater rafting, you can choose where you get in the river if you've ever been before, but you don't really get to choose where you get out. I mean, you can have this plan of this is where we're planning to get out, and we're going to try to work towards the side and all that. But I mean, as far as going, we're going to hit this exact spot. There's like all this rough water going on. You may not exactly get to choose where you get out, and sometimes you end up getting out in the middle of the river because you fall out of the the raft. Well, that's like trading, and you understand that the one thing you have complete control over in trading, the only thing you have complete control over in trading, is when you get in. Now, of course, you can get out, but it may not be where you want to get out. Okay, so that may be a better distinction. You can choose where you only have control over choosing where you want to get in, but you don't have control necessarily over choosing where you want to get out. And since you have that control, don't ever give it up. Choose the right contract. Don't chase the trade. Don't go for $5 instead of 20 because 20 is your minimum. Don't go for a different strike because, hey, it just looks pretty and it'll make more money. Be very, very specific and be on, trade on purpose, and let that trade work out. The way it's supposed to, not just chasing after it. Trying to offer some little nuggets of wisdom here. I guess we're waiting on these trades to do their thing. Sometimes it's like paint drying. That's good, though. Shouldn't be all heart attacks. Good time. I might even adjust the take profit on this one up to like I have the other one, just to try to to close it out before I have to close the webinar before my radio show starts. Raise that up, get down a few more dollars. That one's just oscillating, so I don't know if we're going to get the euro yen one right to the end, because I'll have to end it a few minutes before. So we just have to watch, see where it expires. But normally, yeah, a lot of these I'd be taking profit at, basically I want to take at least a $20 profit on my trades. So $20, $30, like per contract. Now I can go for $6 if I want to. There's nothing wrong with that. That's fine. But I'm just trying to get $20 over and over and over and over and over again. So that's the main reason. I mean, right now we're up $40 on 2, so we're actually there already. A few more dollars, we'll be, 46. But yeah, they'll pop around. Here in these next 5 minutes, we're gonna see them like just go ballistic nuts. All right, so we took our profit on the other one. So we just made $46 on that one. Got one left. And we are really close. We're running out of time. We're going into expiration. Getting pretty close just to closing this one out. Just taking a $10 hit on each contract. We don't have to worry about it because we're literally a tick off of being in the money. Amazing how like the market can move lightning fast and then move like just painfully slow. It's like up, tick, down, tick. So, all right, we'll just assume I close this one out right here. Let's see, we're down 16. We've made 40. All right, so we net 24 out of all those. We'll call it a day. It out. There we go. And going over here and then cancel out my working order. There we go. Okay. So hopefully you at least learned a little bit, just saw some live trading. Yeah, 96.40 cents went back in the money. Doesn't surprise me. But trying to be conservative and put a stop loss on there. I was like, I think this thing's going to close down. But at least we limited our risk on it. And I mean, you may still be in some of those trades. I'm just taking them. You may actually make more money on like that Aussie one that I did and stuff like that, simply because, I closed it out at 16. Maybe you're closing it out at 6. But hopefully you learned a few things. You picked up a few tips. You got some ideas. You saw some live trades. I mean, these were all live trades you were seeing. You didn't just see somebody flipping stuff in demo and talking concept. And I mean, that's a few hours, and I think we did like, I don't know, probably 15 trades at least. Anyways, I hope y'all enjoyed it. And if you have questions, you got ideas, whatever, comments, ask them in the rooms, ask them in the Nadex trading pit room, ask them in the elite trading room, P3 room, whatever. Ask them, in the forum, ask them in the help desk. Just let me know so I can help you out. All right, y'all have a great day.